This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on June 29th, 2012. Our time is 8:40 Mountain, 10:40 Eastern. Radio show runs AM 640 in Toronto, QR 77 Calgary, 630 CHED in Edmonton. In Edmonton next week, we're normally on at 3 o'clock Sunday afternoon. We are going to be on at 2 o'clock due to Edmonton Eskimo football. So keep that in mind, 2 o'clock next Sunday for those that listen in Edmonton. If you ever miss a radio show, we're archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have podcasts to go along with that as well. You can take us anywhere you go. It's the Canada Day long weekend. Happy Canada Day as well. 4th of July in the United States on Wednesday. Happy 4th of July to those that listen to our radio show in the United States. Harold, as we start this show, EU leaders met over the past couple of days. Personally, I think from what I've heard, they've kicked the can down the road again, but the markets seem to be loving what they're saying for today, and gold and silver are up very, very strong.
You bet. Again, it is it's short covering. So gold, as we're taping the show on Friday, is up 43.20. We saw the market basically at a low of 1580, and we actually broke 1600 in gold. So 1600 in gold is obviously an important number, but what we need to see in gold is 16 and a quarter, which is a very important resistance level. Once it breaks 16 and a quarter, 1785 and then 1900. Same thing for silver. What we want to see in silver, we saw a low of 27.17, saw a high of 28.05, which is very impressive. We need to see two closes above $28 for a starter. $32.50, $40, and then $50 are the major resistance levels for silver. All the markets are up today except for the U.S. dollar. Everything is up very, very strong. Oil's up almost $5 on the day, back up to around $83. The U.S. dollar is down. One of the heaviest days I've seen in a long time, down a penny 21, is trading right now at 81.53. So at this particular point, you have the euro, gold, silver, platinum, palladium, oil, and all stocks in a very strong rally at this point. However, one day does not a market make, and what we need to see is follow through. So we're going to see how strong this, situation and this deal is in Europe, because if the deal has got any type of legs, we should see a continuation next week. Unfortunately, what we have next week is a lot of holidays. As Randy mentioned, Monday is Canada's Day. Then you've got the 4th of July weekend, so a lot of traders are going to be away. So we'll have to see what happens next week. But all in all, this is a very positive first step. Again, it just goes to show you how these markets can respond to one bit of information. So when you've got, traders that are short the market because basically the gold and silver markets went short-term bearish, when markets broke through key support levels, now the market's moving back up. And a market can go from bearish to bullish in a day or two. And basically, if we see a close above 16 and a quarter in gold, all of a sudden all the charts start to change. So what we really need to see is obviously some legs with this situation in Europe, which, to be honest with you, I'm not 100% sure by what I've read so far that that's going to happen. As Randy said at the beginning of the show, they seem to be kicking the can down the road, and in all reality, reading what they came to a conclusion on Thursday, or actually Friday morning in Europe, to me was not all that impressive. However, there are certain situations in the marketplace that, again, could push this market substantially higher, the most important one being the relationship between gold, silver, and the U.S. dollar. The reason that gold and silver have been lower recently is because the U.S. dollar has broken through key support levels and resistance levels, and actually turned into a bullish situation. We do not believe in any way, shape, or form that the U.S. Dollar is a bullish currency or a bullish commodity. So it's only a matter of time, until the U.S. dollar falls back down. And what we really still believe is going to happen, and what we would really need to see happen in order for these markets, to hit the levels that I just expressed to you before, we need to see quantitative easing 3. I truly believe that that is going to happen. In actual fact, I don't see any way that it's not going to happen. and I do believe it's going to happen sooner than later. So, again, at this particular point, we saw a very strong rally in the markets in Europe and in the U.S. this morning. Gold is up 43.20, silver's up $1.14, platinum's up $33, palladium's up $11, oil's up $5 on the day. The U.S. dollar is down a penny 21. The Dow Jones is up over 200 points, and the TSX is up about 170. So, again, you have a strong day in the market today, but we're going into long weekends and holidays, and the markets will be very thinly traded. This could work out well for us, or it could hurt us a little bit. But all in all, again, one day does not a market make, and just because the markets have moved up substantially today does not mean that we're out of the woods yet. I'm extremely bullish on precious metals and hard assets over the long term. Again, we don't trade the short-term markets. We're not traders. We're not in the futures markets. We're not buying today and selling tomorrow. We're buy and hold. We've been buying and holding gold and silver for over a decade now, when gold was at $250 and silver was at $4. Obviously, the moves have been extremely impressive. Along the ways, we've seen its peaks and valleys like any other market. The market rallies strong, pulls back on profit-taking or whatever reason, but every time that we've seen these major pullbacks in gold and silver, the market has come back and made brand new highs, and I believe that the market that we're in now is going to do the exact same thing. What we've been in has been in a funk for the last 9 months. The market has really traded in a range, and actually, unfortunately, over the last couple weeks, the market has actually moved into bearish territory. However, that can change very, very quickly just by seeing gold have two closes above 16 and a quarter and two closes for silver above $28, which we're basically at right now. So all in all, again, I'm still extremely excited about the markets. Again, the whole world is screwed up. The fact is that what's going on in Europe and what's going on in the United States and in China and all over the world is unprecedented. So the fact is that we're really dealing with something that nobody has ever dealt with before, because the situations that the world is in right now has never been experienced before. I mean, we've been close with depressions back in the 1929-30 period, but again, we've never seen a situation where Europe could totally collapse. And again, because you have so many countries that are on the verge of bankruptcy because of tremendous debt, the fact is that what they did this weekend, in my opinion, has not really staved off the situation. However, what I do believe is going to happen, and what I do believe that the U.S. government, the Federal Reserve, the European central banks, and the other banks in Europe are going to have to do a quantitative easing, mean print a tremendous amount of money in order to raise enough money to put it back into the economy in order to get the economy going, because all these economies are stagnating at this point. They're not going anywhere. In fact, people are depressed at this point in certain parts of Europe because their incomes have been cut off. Their jobs are worse than in the United States. They have depression-type numbers. They basically have insurance. They basically have unemployment numbers that are 50% for young people and almost 25% for the working class. So, again, things in Europe are horrible. I don't know how in the world they're going to get out of that without printing a tremendous amount of money, and I do believe that is what's going to happen. I do believe that they're going to bite the bullet and say, we'll deal with inflation, but we have to be able to stay in business. The same thing is going to happen in the United States. There's just no way in the world that the tax revenue that is coming in is enough to keep this country afloat. And because there's no growth in the United States, they're going to have to do something to spur on the economy again. And what that normally is going to lead to is quantitative easing again. What that basically means is they go to the printing presses, print a tremendous amount of money in the trillions, and put it back into the economy, hoping that it's going to spur the economy and spur growth and employment and things like that. So far, it hasn't worked. However, again, I just don't see where the options are. So the fact is that the United States is in big trouble. They owe, as we all know, $16 trillion. There's just no way in the world you can pay the interest on that. And when you really look at the United States and Europe or a country as a business, the fact is that they need income. And with so much unemployment, there's less tax revenue income tax revenue because not as many people are working. The other thing is that people are not earning as much money, so they're not paying as much taxes. The other thing is that retail sales are down and people are not spending as much money, so the individual states are not doing well either because they don't have the tax revenue. So that's where the major situation is. They've got very little money coming in and huge debts going out. That's no different than any other business. The difference is that the U.S. government or the Federal Reserve can print this money and stave off what the immediate problems would be. If that was us, we'd be getting calls from bill collectors and we'd be going bankrupt and that type of thing. We don't have the same benefits of printing money. So I do see all of these situations that we just outlined are all long-term inflationary. Short-term, they may say that inflation numbers are down. But when you print the type of money that the Federal Reserve is going to have to print and the European Union is going to have to print, that leads to extremely high inflation, which is why, we're still extremely bullish and excited about the hard asset market, meaning gold, silver, and diamonds. And we do believe that that is the area that you really need to put your money. So again, before we sell the farm and get, tremendously excited that we're seeing a massive turnaround in the metals, here's what we need to see. We need to see two closes above 16.25 in gold, then 1785, and then the all-time highs of 1900. Once those levels are broken, and I do believe they will be broken, then we could see gold go to 2,500 or more. Then, with silver, we're right at a key level right now because we got back over the 26.60 level, and now we're back up to almost $28. I'd love to see two closes above $28, and that would confirm that we're going into a further upswing in the market. 32.50 is, in my opinion, one of the most important numbers for silver. To see silver break back above 32.50 would bring a huge smile to my face and tell me that we're on our way to $40 and $50 silver. So again, don't get overly excited. We need to see some follow-through with this, and I wish that we weren't looking at a long weekend so we could get some further news out of Europe and the U.S. type of thing. But all in all, a great day today, $43 higher in gold so far, silver up $1.14 on the day, platinum up $33, palladium $11, oil's up $5 on the day, and most importantly, the U.S. dollar is down a penny 21, down to the 81.53 level. So all in all, we're going to go into a nice long weekend with a big smile on our face. At this point here, we're looking a lot more positive than we did a couple days ago.
And yesterday, Harold, in the United States, the Supreme Court upheld Obama's health care plan. They basically said it was a tax. That is going to bring more billions and billions and billions of dollars to the United States debt. They have run the numbers, and it is going to be very, very costly. So another problem for the United States to deal with. To invest in precious metals, the one company Harold recommends you use, their name is Worldwide Precious Metals. They're a Canadian company. As we celebrate Canada Day, a Canadian company in business for over 10 years. It's their 10th anniversary celebrations. They have incentives. Speak with them about the ins and outs of starting your own precious metals investment account, why you should have precious metals in your portfolio at all times, good and bad. They're there to help you maximize profit, minimize the risk. Their website is wwpmc.com, wwpmc.com, telephone number 1-866-623-2002. We have a free weekly newsletter we send out via email, the companion to our radio show. This week we have our usual charts of the week, quotes and quick hits, information on diamonds, which we'll talk about a little later in the show. RareColoredDiamonds.com is Harold's website. Gold, silver, platinum, palladium, the sovereign debt crisis in the United States, U.S. debt and deficit, and the real estate market in the United States as well. Get our free weekly newsletter. You can go through it in about 10 or 15 minutes. You can even do it on your smartphone if you want it. Get your name on the list. Speak with Worldwide. 1-866-623-2002. The website is wwpmc.com. Some of the top stories this week in our gold section of the newsletter. Nigel Farage, he was interviewed by King World News, and he said this week, given the mess that we're in, and he actually is calling the UK a Ponzi scheme with the way it's being run right now, and he said, given this threat that we could possibly be facing, a 1931 type movement, You have to be in this market. You've got to be long gold, no question about it. And he touches on 1931. There was an article that I found on the internet this week. It was written by Pamela Haven. We have a link to it in our newsletter. She actually went back and did a story on repeat of 1931 on the horizon. And back in 31, just to summarize, they could have dealt with a financial problem in Europe. They didn't, and it ended up spreading all around the world. Sound familiar? Read that article in our newsletter. That's why Nigel Farage makes a reference to it. Also, this week, Robert Fitzwilson said, if the Fed and other central banks continue with these artificially low interest rate policies, investors should brace themselves for unimaginable turmoil, both in the markets and in the financial system itself. In the meantime, investors need to protect themselves by owning a basket of hard assets and key sectors. For what it's worth, this is wildly bullish for gold and silver. Harold touched on the fact that they have huge deficits in the United States, debt and deficits. They're running deficits of over $1 trillion a year. The debt is $16 trillion. That doesn't actually take into account the liabilities for Social Security, Medicare, Medicaid. They have this new health plan. In fact, some people have come out and said that you can add maybe another $150 trillion. That's right, $1 trillion, because of all the entitlements that they owe their citizens. How are they going to pay for it? Good question. They're going to keep interest rates very, very low for a long time. And really, that's one of the ways they've been able to pay off the bills that they have coming in, which are the interest that they have coming in. They've been able to pay the interest because of the low rates, but eventually that can't stay that way forever. Also this week, John Embry said, we are on the edge of collapse. It's imminent. We've run out of time. If they don't take action, continue to play this brinkmanship, and this gets away on the downside, when you get a hard deflation going, it's really difficult to reverse. I don't think you can say anything with total assurance for the simple reason that we have never, ever been remotely in a condition like this in the history of the world. So the only things that I'm comfortable in at this moment are physical gold and silver. And he also mentioned gold and silver shares, but he is very, very positive on gold and silver. That's John Embry from Sprott Asset Management. James Turk said in the 30s, if people were lucky enough to get their money out of any of the hundreds of banks that's failed, they didn't want to take any more chances. They soon realized that paper currency in their hand wasn't much safer than when they had money on deposit in the bank. The panic to obtain gold and silver marked the bottom of the Great Depression. The solution was a higher gold price, and this is the same solution needed today. President Roosevelt knew the solution in 1930 and lowered the gold content for the dollar, thereby raising the gold price. Central bankers don't like the solution because it takes away the power they now have with fiat currencies, backed by nothing but their promises. But a higher gold price is coming nonetheless. It is the only solution. And Harold, Richard Russell, to summarize here, he said this week, he actually has this story on King World News. This terrifying financial collapse and gold, sadly, the whole world is searching for income and safety. And the fact is, there is no income and there is no ultimate safety. Then how does one build wealth? The Asians know the answer to that. You buy and hold gold and exercise a lot of patience. And ultimately, Harold, that's why we have gold and silver in our portfolio. That insurance policy, you need to own it. You need to add on dips. We're in a long-term bull market, as somebody like out of Toronto, Gluskin chef David Rosenberg has said. You buy on the dips, and it's your insurance policy. And you have to sit back and be patient, because we've done this show for over 10 years, and this reminds me of the lead up to the financial crisis in 2008. You can see it playing out, and we were telling people, be prepared. There were people that took our advice, others didn't. Those that did were very, very pleased, and the others that didn't obviously did suffer. But gold, Harold, I don't see how it does not go much, much higher.
Me too. And again, it is a waiting game, because every market has its time. we've been in this market for a decade, and I don't ever want it to seem like we're just holding on to and grasping at straws type of thing. If this move was over in gold and silver, we'd be the first ones to let you know that. But the fact is that it's not, because we haven't accomplished why we originally went into the market in the first place, which was because of massive inflation, which will follow everything that's going on right now. So again, as Randy just said, and as I've said earlier, we're not trading these markets. We're buying and holding them. That's why you want to own it physically, and don't worry about the dips in the market. If all of a sudden everything had changed and we went back to the 90s when the U.S. dollar was very strong and the stock markets were strong and world economies were strong, we'd be out of the gold market. But we're nowhere close to that. In fact, we're the exact opposite of that, and that's why we're still in the gold and silver and diamond markets, because the fact is that we haven't even come close to hitting the numbers that we feel we're going to hit, and for the reasons that we got in the first place, which is inflation. By the way, I'm in Colorado for the summer. I work from my home out of here, and there has not been any rain in Colorado for 2 months now. In fact, most of you have probably seen the forest fires, the worst forest fires of all time in Colorado history, have basically decimated the northern part of Colorado. Fortunately, I'm in the southern part in Aspen, but the fact is that there's a drought going on throughout the midwestern part of the United States that is so severe that they're actually comparing it to the Great Drought of 1980 that caused $78 billion worth of damage back in 1980. We've seen the price of corn go up 30% in 1 week. And basically, this is something that we've got to watch fairly closely, because if there is a full-fledged drought throughout the central part of the United States, watch for the price of grains to skyrocket, corn, wheat, and soybeans, and then watch the result that's going to happen to the cattle markets and everything like that. So again, all of these scenarios seem to be happening at the same time. You've got these horrific, financial situations in Europe and in the United States that, again, are just taking on a life of their own. And now you've got these other situations. President Obama is here in Colorado today examining the fires, but the fact is that it's the worst that we've ever seen, and whole towns have been wiped out. Over 300 homes have been burned down, and the fact is that the costs are in the billions and billions and hundreds of billions of dollars, and again, this drought is going on in the central part of the United States. So all these scenarios happening, believe it or not, are all inflationary. When there's no corn, wheat, and soybeans, and then you see the price of cattle drop initially and then skyrocket. These are all inflationaries. You've got food inflation, you've got oil inflation, and you've got monetary inflation, and that's the reason that we're in gold, silver, and diamonds, because if you don't own those three assets, you're susceptible to massive losses, and that's unfortunately what most people are going to be in that situation, because they don't understand the ramifications of high inflation. I've been through these markets before. I've traded commodities for over 35 years, and I've been through the run-up in the 70s and 80s in gold and silver and in diamonds, and I've had experience trading these markets. I see very similar situations back to 1980 to what we do right now. That's when gold went from $35 in 1972 all the way up to $850. We've seen gold go from $250 up to $1,900, and we do believe that we will see gold in the several $1,000 levels before this whole thing is over.
The telephone number to invest in precious metals, 1-866-623-2002. The website, www.pmc.com. Going to come back and talk about rare colored diamonds, rarecoloreddiamonds.com. As the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on June 29th, 2012. Our time is 9:06 Mountain, 11:06 Eastern. Radio show runs AM 640 in Toronto. Also, QR77 in Calgary, 630 CHED in Edmonton. Next week in Edmonton, we are going to be on at 2 o'clock Sunday instead of our usual time of 3 due to Edmonton Eskimo football, so keep that in mind. Next week, we will be on at 2 o'clock. Ever miss a radio show? We are archived on Herald's websites, HESradio.com, rarecoloreddiamonds.com. Sign up for the podcast. You can take our show anywhere you go. Our radio show is portable. To invest in precious metals, the one company, the only company Herald recommends, Worldwide Precious Metals, a great Canadian company. Been in business 10 years. They have 10th anniversary incentives. Canada Day on Sunday. Happy Canada Day. Their website is www.pmc.com. Telephone number to investigate and let them educate you about investing in precious metals. 1-866-623-2002. 1-866-623-2002. www.pmc.com. Herald's website for diamonds is rarecoloreddiamonds.com. And we have had many, many stunning featured diamonds, and yet another week, and we have another stunning featured diamond. You'll see it in our newsletter. You'll see it online, rarecoloreddiamonds.com. Click on the featured diamond link. It will take you there. You'll see the video for the diamond. This week's diamond is a 1.05 carat radiant cut, fancy, intense pink diamond. And it was interesting to note this week, Financial Times, FT.com, had some interesting stories about diamonds. They said, to quote, De Beers, the largest diamond producer by sales, estimates that rough diamond prices rose in 2010 by 27% and another 29% in 2011. Also, they said in this story, diamonds are expected to be supported by the lack of supply. No new significant diamond mines have been found in at least a decade, and with lead times for mines from discovery to production averaging about 8 years, and large miners such as BHP Billiton and Rio Tinto looking to leave the sector, supply growth is expected to be sluggish for years to come, says Des Kalia, analyst at RBC Capital Markets. On the demand side, China and India are expected to be drivers of growth. Mr. Kalia believes the two countries, which each hold about 10% of global demand, will together account for a third of the market. The industry is also hanging its hopes on the policy move by the Chinese government to encourage consumption, to benefit luxury goods, including spending on jewelry. Martin Rappaport, founder of Rappaport, the diamond services company, said it's going to be normal for people to own diamonds in China. And we have stories in our newsletter. You can get the newsletter from Herald. Connect with him, rarecoloreddiamonds.com, or call 1-800-432-1022. He'll get you the weekly newsletter. Another story, Asian demand for diamonds set to boom. Costly gold losing its sheen to diamonds in India and China. Those are some of the stories that we have in our newsletter that are must-reads. But Harold, that is the catalyst for the future. Sure, we know that colored diamonds are rare to begin with. But then you start adding in all these other factors that I just spoke of. The rarity goes to another whole level, and the catalyst for the future will be scarcity, and it will drive the prices substantially higher.
That's why we're in the market, Randy, and that's a great article. There's so many great articles coming out on diamond investing where that never, ever happened before. So, again, in the world that we live in now with so much uncertainty and so much fear in the marketplace and volatility and everything, it's great to have an asset like a rare-colored diamond that, again, doesn't trade on an exchange, so you don't have the volatility and the risk you have in trading stocks and commodities. So, for example, a yellow flawless diamond, it's got a track record. It's had one for many, many years. They increase by 25% a year. They double every 4 years. But that could change substantially with the fact that what you just brought up is 100% true. There has not been a new diamond mine that has been discovered in the last 15 years that produce any quantity of colored diamonds at all. In actual fact, there's been no new major mines in the last 15 years that produce any diamonds. So you do have a supply and demand situation that will push the price of diamonds up substantially. But we're not talking about just everyday diamonds. We're not talking about your normal diamonds that you see in a jewelry store type of thing. We're talking about the rarest of rare. We're talking about certain diamonds that are nearly impossible to get. You know, when most people think about investing in diamonds, you know, they think that you have to be a multimillionaire in order to make money in the rare colored diamond market. In fact, that's not necessarily true. We have proven, you know, through our auctions and all that, that the biggest returns, percentage-wise, are in the lesser-priced diamonds. For example, yellow flawless diamonds in the $20,000 range, they double in price every 4 years. As there's less and less and less of them around, we could start to see that they go up substantially more than that. In actual fact, in 1979 and 80, when we had high inflation, double-digit inflation and double-digit interest rates, do you know that when gold went to $850 and silver went to $50, colored diamonds went up 500% in 2 years? So these markets can take on a life of their own. These are amazing assets that are portable and private. You know, when the banks get in trouble, people line up at the banks and they're petrified because they want to take their money out in cash and bury it in the backyard or put it in the mattress type of thing. A rare colored diamond is portable private wealth. The Europeans call it real estate in your pocket, meaning that you can carry a diamond in your pocket. Nobody would even know it. If you wanted to cross a border from Canada into the United States or Canada into Europe or into the Asia or wherever, if you carry more than $10,000, you're susceptible to jail time, them confiscating that asset, and again, it's just not a smart idea. But a diamond can fit in your pocket of your jeans, and it could be a $5 million diamond, and nobody would even know it. In fact, diamonds are such portable, transferable wealth, you know, that's what it's most used for, is distributing wealth and moving wealth over borders type of thing. So depending on how severe the world situations get, will obviously tell you how much these diamonds are going to go up in value. But the worst case scenario, that if you put $20,000 into a yellow flawless diamond and you held that asset for 10 years and then that diamond was worth $100,000, that's something that my clients do for retirement. They've done it for many, many years, for decades now. They buy them and put them away because they're safe. They go up every year and they double every 4 years, and a $20,000 diamond in 10 years from now will be worth about $100,000. It could be worth much more than that if we get the massive inflation that we believe we're going to get over the next 5 to 10 years. So it's obviously a very, very important asset. The thing about it is that it never, ever goes down in value because there's so few of them available. If you look on my website, rarecoloreddiamonds.com, spelled both Canadian and American, and go to the loose diamond section, you're going to see almost like you're visiting a museum. There's some pieces on that website that defy description. In fact, we have probably the only pure purple diamond available in the world today for sale. If you go to our legend and look at the colors that are available, and we carry all colors of diamonds, some of them much more rare than others, red being the rarest, purple, blues, and greens being right under that, and pinks. The fact is that we have probably the only pure purple diamond available in the world today. It's only a carat, about the size of your baby fingernail, but that little 1 carat diamond is worth over $1 million because of the tremendous color. Do yourself a favor and look at that diamond. You know, not everybody has that kind of money to invest in a diamond, but still to be able to look at it, most people have never even seen one, let alone know that a purple diamond exists. We made this week one of the rarest diamonds as a featured diamond. We featured our diamond every week. This is a 105 radiant cut, fancy, intense pink diamond. When you look at the video on this diamond, it will take your breath away. Pink diamonds are amongst the best investments you could possibly make because the fact is that they're extremely rare. They go up tremendously in value, and we also specialize in argyle pinks, which is where 95% of the pink diamonds in the world come from. That mine is going to close down. So the fact is that there's not going to be any more pink diamonds. If you're one of the few to own one of these amazing diamonds, they start at about $20,000 and go up from there into the millions, that is going to be one of the biggest returns you'll ever see. You know, the funny thing is that we live in a world right now where we can't make any money. The fact is that unless you're willing to speculate in the stock markets or commodity markets or whatever, you know, that's the only way that you can win or lose money. The fact is that with interest rates extremely low and the dangers out there in the financial markets, our recommendations are to hold hard assets for the long term, not to speculate and not to take any unnecessary risks, and to have the type of assets that will basically maintain what your net worth is worth. Because the fact is that, you know, as these markets fall, back in 2008 when Lehman Brothers went under, and all the markets fell and the stock market fell from 14,000 down to 6,500, almost everybody lost most of their money. They were in stocks and their retirement funds and everything like that. The only market that didn't fall was diamonds. during that time when everything was so chaotic and everybody was lining up at the bank to get their money out and petrified and their home values were plummeting in value, diamonds were still going up in value. In fact, in 2008, when everything was hitting the wall and all the markets were plummeting and people were panicking, there was a blue diamond that went for sale in New York, and instead of selling for $200,000, it sold for $1.4 million a carat. It went up 700% because the mine that produced it closed down. That's the exact same situation that's happening in pink diamonds. If you were to take $20,000 and put it into a yellow flawless diamond, in 10 years from now, you're going to have $100,000. If you take $20,000 and put it in the stock market, in 10 years from now, God knows what you're going to have. You could have nothing, you could have a little more, you could have less. Chances are is that the small investor doesn't stand a chance in the stock market anymore. So in these difficult times, and again, these are times that none of us have ever seen before. We have never seen a situation where so many countries are on the verge of bankruptcy. And it's not only in Europe. It's not only Spain and Portugal and Greece and Italy. It's France. It's other countries in Europe. It's the United States. It's China. Don't think that China isn't in huge trouble. The only thing that China is doing differently than other countries is they're smart. They're buying physical gold and diamonds. That's exactly what all the reports are saying. So if that's the route that that China is going, that seems to have most of the money at this particular point. When I say they're in trouble because of exporting, and they're in trouble because of real estate. But basically, China has made some very smart moves, and again, two of the smartest moves, in my opinion, are into hard assets. They announced that they're buying more gold than any other country, and they're telling their people to buy diamonds. So my strongest recommendations are to diversify yourself so we can get through these extremely difficult times. If you believe in insurance on your car, your home, your health, your life, that type of thing, get insurance on your financials. Because the fact is that one bad move and we could be wiped out. And we're not the Warren Buffetts of the world. The people that listen to my radio show, we're just hardworking Canadians. We've worked and we've put away some money, and we're a little bit frugal, and we've had some success, and we want to keep our money. Right now is not the time about capital appreciation. It's about keeping your money and being able to take advantage of other situations. And for those that don't know how to get through these difficult times, they're going to pay for it. So the fact is that my strongest recommendation, and this is what I've done for myself, and I would only recommend to you what I would do for myself and for my family. I own gold and silver physically. I own a lot of diamonds because that's my business. I have no debt, and I have absolutely no speculation in the markets. So basically, whatever is going to happen over the next 4 to 5 years, I believe myself and my clients are in a situation right now to come out of this stronger than anybody else that's speculating or not doing anything. So again, the recipe for success at this time is to lay low. It's not to speculate, not to get crazy about the markets because it's up 1 or 2 days in a row. Just let the market do its thing. If you're in gold and silver, you should own it physically. You should not be trading these markets in the heavily leveraged markets, because one downturn and you're going to lose your money. And the fact is, you do not want to be out of this gold and silver market, because you've seen what this market has done for 10 years. Gold has gone from $250 to $1,900. Who would not have wanted to be in that market? Silver's gone from $3.80 all the way up to $50. Who would not want to see a repeat of that? Well, basically, we're going to see that and more again, because we have not even hit the inflation that's coming, and inflation is coming because of extremely weak currencies and high oil and food prices. The smartest move you can make at this point is to own a diamond. Put it away for safety. We own H. Siegel Fine Auctions. One of the stigmas about investing in diamonds is, how am I going to sell it? Who am I going to sell it to? We understand you. That's why we built H. Siegel Fine Auctions, the premier auction house in the world for selling high-end collectibles like colored diamonds, emeralds, rubies, and sapphires, and very high-end gold and silver collectible pieces. That's what we built for our clients, is a way for you to sell your diamonds down the road. So we're the only company that has it. We listen to what's going on. We know what's happening in the market, and the marketplace needed an auction business like H. Siegel Fine Auctions. There's nothing like it in the world today. It took me 2 years to build it, and I built it for my clients to resell their diamonds. So if you are getting into the diamond market and you're not looking at my company, first of all, you should be, because we're the premier company in the colored diamond business. In fact, I eat, sleep, and drink this business. I've been been in it for many decades, and all you have to do is look at my website and compare it to anybody else's to understand why we are in the position that we're at. But that's not the most important thing. The most important thing is to be able to resell our clients' assets, and we're the only company that invested in something to do that. So again, if you do want to get into the rare colored diamond market, if you want to make money in diamonds and safety, please go to rarecoloreddiamonds.com. Look at our loose diamond section. Look at the featured diamond. We have an investment section where you can look at our historical price tracking system. It will tell you what diamonds were 30 years ago, what they are today, and what they'll be 10 years from now. We also feature a beautiful diamond each week. This week is an extremely rare 105 radiant cut fancy intense pink, extremely rare diamond, and we also offer investment seminars on diamonds. Basically takes an hour to do approximately, but it's one of the greatest presentations you'll ever see. It'll tell you everything about diamonds, from when they come out of the ground, what they are, how to read a GIA report, how to cut a diamond, how to set a diamond in jewelry. It goes through argyle and flawless diamonds and makes recommendations, and it's one of the greatest presentations you'll see, and we put this together to educate our clients so they can understand an asset that they probably have never dealt in before. So again, we do everything for you. We show you the diamond. We deliver the diamond directly to you. You own it outright, and we send you our newsletters each week. And then when the time comes to sell the diamond, we're the only company that can resell your diamond for you. Again, we want to help you in the rare colored diamond market. It's my major business. It's what I do, and it's what I do best. So again, if you have an interest in the diamond market, contact us, rarecoloreddiamonds.com. It'd be more than my pleasure to spend time with you and discuss diamonds and your financial situation as to what you may have to do personally. And again, I'm here for you. I've been on the radio myself personally for over 25 years. I'm extremely well known in the investment business, but I'm extremely conservative, even though I recommend, commodities, and I've traded commodities for many, many years. I'm an extremely conservative person that does not take risks, high risks at all. So again, especially in this time when there's so much problems in Europe, the U.S., and all over the world, own gold, silver, and do yourself a favor, put away a diamond. The stock market is so risky at this point. All you need to do is pull some money out of stocks and put it into another asset that will help you down the road, like a yellow flawless or an argyle pink diamond.
Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com. And definitely give him a call as well if you prefer to do business over the phone, 1-866-623-2002. Get our newsletter from Harold. The other story that we have about diamonds, Asian demand for diamonds set to boom. The demand for diamonds is set to boom. There's no doubt about this. It will be driven primarily by the growth of markets in China and India, says Manish Dukaj from Hari Krishna Exports, a diamond trading firm in India alone. He noted the market for diamonds is expected to grow faster than that for gold over the next 5 years, with some estimates pegged at 1 trillion rupees. During that time, India and China are expected to represent half the global growth in demand for diamonds. Connect with Harold, rarecoloreddiamonds.com, telephone number 1-800-432-1022. And the reason we advocate hard assets, whether it be gold or silver, whether it be diamonds, you have your savings. And you want those savings to maintain their value against inflation. And if you're not in the right asset class to profit and protect with that money you've allocated, you're obviously going to be in a losing position, and you won't be in the position that you want to be when it comes to retirement. You need to take a look at alternative assets, diamonds. You need to look at gold and silver, have an allocation in your portfolio that will take into account inflation and even possible deflation. So your assets, the money that you put into an asset, will be able to maintain its value. That's what it's really all about, maintaining value and growing faster than inflation. To invest in precious metals, the telephone number 1-866-623-2002. The website is www.pmc.com. We have about 6 minutes left in our show today. One thing that I wanted to get to regarding silver, the silver section of our newsletter. And this is a quote from Morris Hubbard. We have a chart that goes along with this. Get the newsletter from Worldwide or from Herald. Silver is one of my favorite assets, according to Morris Hubbard. I'm highlighting a monthly chart of the white metal this week. Some technical indicators are now more oversold than at the lows of the 2008 crisis. Note the position of the Williams oscillator. Tremendous value is presenting itself to silver investors. Continued strong buying by commercial traders suggests substantially higher prices are likely. I'm not concerned that silver is lagging gold here. That's normal at the beginning of a bull move in precious metals. June, and this is the important part, June, and here we are at the end of June, is a seasonally tough month for silver, but July can be excellent. Position yourself in June. You profit in July, and you can see that on this chart. So get that chart. As well, we have another chart, courtesy of Dimitri Speck. This is a seasonality chart for silver. At the end of June, you can see the end of June, beginning of July. The date is right at the area of silver's point of maximum seasonal weakness. And they're actually saying that now would be an excellent time to start a precious metals investment account to include gold and silver due to seasonality. And Harold, that's one thing people have to use to their advantage. Not only the gold to silver ratio, which is the gold to silver ratio right now is very high regarding silver. It's up around 58, which is very, very high. That's a positive for silver as well. The seasonality, taking advantage of what's happening seasonality-wise. Now's the time to start your own precious metals investment account. Speak with Worldwide Precious Metals, 1-866-623-2002. The website is www.pmc.com. And the real estate market in the United States, it's something that we haven't spoken about for quite some time. There has been a little bit of good news coming out regarding the real estate market, but one of the stories that we were able to track down this week is that due to the anti-foreclosure laws that they put in place due to the robo-signing scandal, where they had just people signing foreclosures and turned out to be a massive scandal in the United States, there's a huge, huge inventory, shadow inventory of properties that have not been sold that will come on the market. And because of this lack of inventory right now that will come on the market eventually, you're starting to see prices go up, little mini bubbles in some real estate markets. So, Harold, that's another thing for people to watch out for. Those that are thinking about maybe investing in real estate in the United States, Canadians, be very, very careful, because you're seeing these little mini bubbles. But once we get the shadow inventory back on the market after they clean up the robo-signing scandal, then you could see the prices in real estate continue to go down. We have about 3 minutes left here.
Yes, you certainly can. I would not invest in real estate in the U.S., even though there's some great deals. The fact is that the market looks like it's going to still go further, which is unfortunate because there's been a lot of people that have jumped into the market, bought again at the higher prices, and now they're seeing the prices go down again. So it's like the middle class can't get a break at all. If the stock market doesn't take away your money, the real estate market did. And when the real estate market took that huge downturn, it destroyed the economy and it destroyed the middle class. In fact, the middle class in the U.S. is basically almost on poverty. Very few people have more than $10,000 to their name, and they've lost more than 40% of their net worth since 2008. So, again, how are they ever going to make it back? You can't make it back in stocks, and you can't make it back in real estate. You got to be very smart about what's going on right now, not take unnecessary risks, and, again, just do the right thing. My strongest recommendations during these difficult times: own gold, own silver physically, put away a diamond or two for yourself and for your family, pay down your debts, keep some cash on hand, and let the markets come to us. That's what I'm doing. That's what my clients are doing. And I would bet that when all the dust settles, we're going to be on top.
Harold, have a happy Canada Day. And for those that listen in the United States to our radio show online, even people around the world, happy 4th of July. Have a fantastic long weekend.
Thank you very much. I wish everybody a fabulous Canada's Day, and I hope the weather's great and you have a great time with your family. It's been a great show. I wish everybody a wonderful weekend and a very profitable day.
Before we get to the end of the show here, two little nuggets. J.P. Morgan, remember how we talked about them? $2 to $3 billion in trading losses? Oh, wait a minute. They came out on Thursday and said the losses may reach $9 billion.
Wow.
We had talked about Stockton, California going bankrupt. They are going bankrupt. They filed the bankruptcy petition. Stockton, California, bankrupt due to pension problems as well. North Las Vegas is considered a financial disaster area. And they can't go bankrupt, but what they've decided to do is consider themselves a financial disaster area. Shocking, to say the least. Now's the time for hard assets. Protect yourself. Be aware of the J.P. Morgans of the world and protect yourself. To invest in precious metals, 1-866-623-2002, the website wwpmc.com. Connect with Harold about diamonds, rarecoloreddiamonds.com, telephone number 1-800-432-1022. Don't forget, we're on at 2 o'clock next week in Edmonton. That's it, another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.